Welcome to the Daily Update Podcast, where I'll go over the action in the market from Monday, June 30th, and we'll see how things look for Tuesday, July 1st. It was another record-setting day on Wall Street, with the S&P 500, NASDAQ, and NASDAQ 100 all closing at all-time highs. The S&P 500 climbed 0.52%, matching Friday's gain, and closed above the psychologically significant 6,200 level. Trading volume was slightly above average but lower than Friday's level, suggesting steady but not overwhelming participation. Growth stocks led the charge, outpacing value stocks, while the broader market remains positive across all timeframes. Notably, the SPY ETF is nearing a golden cross, with the 50-day moving average poised to cross above the 200-day, a bullish technical signal. The ADX on the weekly chart is also close to confirming a positive trend, reinforcing the market's upward momentum. Reflecting on the second quarter, the market showed resilience, recovering from an intraday drop of over 21% at its lows, though under 20% on a closing basis, to post new highs by Friday and again on Monday. This sets a strong tone as we head into the second half of 2025. Several factors fueled the rally on Monday. Late in the session, Apple's announcement about integrating external AI into Siri sparked enthusiasm, boosting both the S&P 500 and the NASDAQ 100. This underscores the continued influence of technology and AI on market sentiment. On the policy front, a procedural Senate vote passed to extend the 2017 tax cuts, alongside measures to introduce Medicaid work requirements starting in December 2026, phasing out solar and wind tax credits, raising the SALT deduction cap to $40,000 for 5 years for those making under $500,000 a year, and increasing the debt ceiling by $5 trillion. The Congressional Budget Office projects this could add $3 trillion to the deficit over a decade. The bill now awaits full Senate and House approval, with a potential signing ceremony by President Trump on July 4th. The markets reacted positively to the prospect of continued tax relief and fiscal stimulus. In trade news, Canada's decision to drop its digital services tax signaled progress in U.S. trade negotiations, with potential EU deals on the horizon. This bolstered investor optimism about global trade dynamics. Additionally, post the 2008 crisis, bank stress tests confirmed the resilience of the financial institutions, further supporting market confidence. On the macro side, the 10-year Treasury yield dipped to 4.23% from 4.28%, providing a tailwind for stocks. The U.S. dollar continues to weaken, nearing oversold levels, which could benefit stocks, but warrants monitoring. However, economic data was mixed, with the Chicago PMI coming in weaker than expected at 40.4, below the forecast of 43.4, signaling ongoing softness in manufacturing. From a technical analysis perspective, the market is firing on multiple cylinders. Short-term momentum indicators, including the Stochk RSI, Williams %R, CCI charts, and stochastics, are extremely positive, but also could be considered to be flashing overbought signals, suggesting caution. The S&P closed above R1 at 6196 and the 6200 level, reinforcing the bullish momentum. Intermediate-term indicators, including the balance of power, go-no-go signals, McClellan oscillator, all remain firmly bullish, with the market trading at the high end of the +3 standard deviation channel. Long-term signals are mixed, with the TTM squeeze on the monthly chart still negative, though the 150 and 200-day moving average studies are supportive. The advanced decline lines hit new highs based on both price and volume, a bullish sign, with volume leading the way. However, only 56.6% of S&P 500 stocks are above their 200-day moving average, indicating narrower participation than the headline reading suggests. Sentiment rose to 67 from 65, but approaching that 70 to 75 range where caution is warranted. Insider buying also weakened, hinting at bearish sentiment among corporate insiders, which could be a contrarian signal to watch. Looking at sector performance, tech and communication led the way, powered by heavyweights such as Apple and Meta, as well as Netflix. The financials also gained traction following the positive stress test results. On the flip side, discretionary, including names like Amazon and Tesla, lagged, alongside energy, materials, as well as small and mid caps. Weakness in staples and utilities reflected a risk-on mood, which is generally positive for market sentiment. Looking ahead to Tuesday, July 1st, seasonality is in the market's favor. July 1st marks the start of the third quarter, and historically, July is positive 59% of the time since 1950, with the first half of the month being one of the strongest periods of the year. That said, a dip around July 4th is not uncommon, often followed by seasonal strength. The economic calendar is pretty heavy, with key reports including construction spending, ISM manufacturing, global manufacturing, and the JOLTS job openings report. Fed Chair Jerome Powell will give a speech on Tuesday, which could also move the markets, particularly if he provides clarity on monetary policy. Geopolitical factors remain a wild card. Reactions to the Senate bill, developments in the Middle East, or tensions in regions such as Russia-Ukraine could influence sentiment. Technically, the 6,200 level will be critical both as support and resistance, with July pivot points now in focus. Overbought short-term indicators suggest potential for consolidation, but the broader trend remains positive. In conclusion, the S&P 500 is developing an uptrend, buoyed by strong seasonality, supportive technicals, and positive macro developments such as lower interest rates and trade optimism. However, overbought conditions, elevated valuations, and geopolitical risks call for vigilance. Tuesday's economic data, as well as Fed Chair Powell's remarks, will be pivotal in setting the tone for the start of the third quarter. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.